This is the largest AI project in the world at the moment, and we believe it is terribly undervalued. We are prepared for a major shift in consumer preferences towards better products, but we still have a long way to go. The price target is 27. Electric vehicles are becoming more affordable. Tesla is driving that price reduction just by passing cost savings through to its customers. Hi, fellow investors, I have a question for you. Fortunately, the solution may be near. Today, we're revealing a secret that has been waiting for investors worldwide. Are you ready to learn the precise moment to purchase Tesla stock and perhaps gain millions? The wait is finally over as we delve into Cathie Wood's most recent revelation. We'll cover the nuances of Tesla's stock, the variables influencing its possible surge, and how this might be the once-in-a-lifetime investing opportunity. Watch this space as we reveal this revolutionary insight that has the power to alter the trajectory of your investment journey. This stock analysis is more than simply another one. It's the key to opening up a world of opportunities in the future. Prepare to go out on a thrilling financial adventure here. In the headlines about Tesla stocks, opportunity and fortune collide. Remember to tick the subscribe button and ring the bell to receive notifications. The road to millions now starts against the backdrop of difficulties that numerous organizations are facing. This week, Tesla stands out as an exception. Our focus is on Tesla's distinct position in the market, a subject that has attracted a lot of attention. Let's examine Tesla's dynamics. When we compare Tesla, the firm recognized for its innovative electric automobiles, to its market valuation, we find an interesting contrast. The numbers are astounding, especially when compared to other industry participants. Recent data indicates a notable increase, and however, contrary to previous predictions, Tesla's global market share, including the Chinese market, actually increased last year. This rise defies the entry of so-called Tesla killers from established brands like Audi and Jaguar. This isn't just about Tesla's success. It's a commentary on the broader automotive industry. A revision in Tesla's long-term forecast, despite the fact that many believe the company remains undervalued, shifts perspectives, reveal two key assumptions that have changed recently. Many well-known automakers are finding it difficult to switch to electric. This struggle is demonstrated by their inadequate battery technology and their incapacity to effectively adjust to the changing demands of the market. Now, let's look at the financial implications. Over the course of the next 18 to 24 months, it is anticipated that the price of electric vehicles will fall below that of gas-powered vehicles for the first time. This tendency is probably going to continue as battery prices decline. Traditional automakers are at a crucial point in their history if a sizable amount of their capital is still invested in internal combustion engines. Due to the urgency of the situation, Tesla was invited to construct a sizable facility in Berlin, Germany. This action shows that the sector has realized it must quickly change or risk suffering a large loss of jobs. Let's now discuss investment. 2023 has proven to be an incredible year for tech companies, with Tesla leading the way with shares up an astounding 110 as of early August. This surge is consistent with the NASDAQ Composite Index's 34 in annual growth, but it's not only Tesla. Since the tech sector has grown significantly, investors may wonder if Tesla is the stock to watch in 2023. The answer depends on the company's performance, as well as the overall backdrop of the industry's expansion and the market's reaction. Let us temporarily shift our focus to Facebook and Tesla. Both companies have shown remarkable resilience this year, mirroring the renewed interest of investors in growth stocks. This comes after a challenging 2022, in which many favored stocks saw a dramatic decline, some by as much as 30 to 40. While these fluctuations are daunting for many investors, they are common in the stock market for those with an experienced eye on the market. The remarkable 110 increase in Tesla's stock over a mere 7-month period in 2023 serves as a vivid illustration of the dynamic nature of the stock market. Tesla's strong performance and investor confidence are attested to this significant increase. However, this rapid growth also highlights a crucial aspect of stock market investing: the inevitability. Fluctuation expert investors are aware of the stock market's cyclical nature, and know that even the most prosperous businesses like Tesla occasionally have downturns. These downturns can be caused by a number of things, such as market corrections. Economic downturns, shifts in investor sentiment, or difficulties unique to a particular company. For example, Tesla a leader in innovation and technology in the electric vehicle sector, may experience volatility as a result of shifting competition dynamics or technological regulatory environments. Noting that stock market volatility is a typical aspect of investing is crucial. Experiential investors approach these market dynamics with a strategy that includes diversification, a long-term perspective, and an understanding of the underlying business fundamentals. They recognize that while short-term fluctuations can be unsettling, they often do not reflect the long-term potential of a company like Tesla, known for its innovation, market leadership, and growth potential in the electric vehicle sector. Furthermore, experienced investors often use downturns as learning opportunities. High-performing stocks often experience sharp increases in value, but they can also undergo significant corrections. For example, in Tesla's history, there have been instances where the stock has experienced substantial drops in value over short periods of time, reflecting the market's reaction to various internal and external factors. This strategy is predicated on the idea that a brief drop in the price of a fundamentally sound company's stock presents an opportunity to increase one's position in the stock at a discount. As we dig deeper, the question of whether it's time to add Tesla to your portfolio emerges. This is especially relevant for individuals who haven't invested in the company yet. However, since traditional automakers are just now starting to enter the electric vehicle market, caution is advised before discounting them. Several factors contribute to Tesla's competitive edge. Firstly, the company's advancements in battery technology. Secondly, its proprietary artificial intelligence chip puts it 4 years ahead of competitors in chip technology. According to our analyst, James Wang, a former NVIDIA employee, this chip is crucial in the race towards autonomous driving, where data is king. Finally, Tesla has an astounding 14 billion miles of real-world driving data, significantly exceeding that of its closest rival. It's important to look deeper into some of the challenges that Tesla has faced. Notably, the company saw a significant decline in its gross margin, which fell from 25 to 18 year-over-year. This decline has been concerning to investors and highlights the complexities of the automotive industry. Additionally, Tesla's financial performance has been impressive, surpassing Wall Street estimates by generating $25 billion in revenue and 78 cents in diluted earnings per share. Tesla is operating in a market that is changing quickly, and there are a number of reasons why the gross margin decreased. One of the main causes is the company's decision to repeatedly lower the prices of its vehicles throughout the year. This move was made to boost demand in the face of rising inflationary pressures and rising interest rates, both of which can reduce consumer spending, particularly on large ticket items like cars. Although lowering prices can increase sales volumes, it also has a direct impact on the profit margin per vehicle sold, which can lead to a lower gross margin overall given the rising cost of financing. The background of rising interest rates is especially pertinent in this instance. Customers are more likely to make large purchases, such as cars, which can reduce demand. Inflation also plays a big factor in this, since it reduces customers' purchasing power and makes them more frugal with their money, especially when it comes to luxury or non-essential goods. Tesla has demonstrated a strategic balancing act in response to these economic pressures. While lowering prices can make Tesla vehicles more accessible to a wider range of consumers, potentially increasing market share and sales volume, this approach may also squeeze the company's profit margins, which could have an impact on short-term profitability. This circumstance also illustrates the larger difficulties the automobile sector faces, which require businesses to constantly adjust to shifting market conditions. Customer inclinations and Tesla's competitive environments in analyzing a company like Tesla. It's important to take into account the larger economic context, like high interest rates and inflation currently in place. Consumer spending power is impacted, which influences the decision to purchase high-value items like electric vehicles. Therefore, as we assess Tesla's current position and prospects, it's important to strike a balance between our enthusiasm for the company's technological advancements and a sober assessment of the market and economic realities. This balanced approach is supported by investment in the current economic climate. Consumers are reconsidering major purchases, including cars. In response, Tesla has strategically offered discounts, a move that has impacted their gross margins while boosting sales. However, was this the right move? Legends like Warren Buffett are crucial to making informed investment decisions. Not always the wise man of finance, Warren Buffett has always stressed the significance of adjusting to the economic climate. Tesla's price strategy is in line with this idea. But pricing isn't the only factor affecting the company's finances. One major contributing factor has been the company's research and development spending, which surged to an astounding $143 up 40 year over year. Although such large spending may raise questions regarding present profitability, it's a visionary move that underscores Tesla's aim to stay at the forefront of the electric vehicle race. The company invested roughly $1 billion in just one quarter. This $1 billion ASTI dollars expenditure from Tesla is not merely a cost. Rather, it is a calculated move to keep the company at the forefront of its sector, which is important for both Tesla and its investors. Adopting a more comprehensive perspective, Tesla has quickly a major player in the automotive and technology industries. In stark contrast to legacy automakers like Ford, which still struggle with profitability in their EV divisions, Tesla is building a cost advantage in car production, thanks to its unique designs and forward-thinking strategy, which have proved disruptive thanks to its manufacturing expenditures. Renowned industry analyst Cathie had anticipated that it would be difficult for conventional manufacturers to compete with Tesla without suffering losses. While its full self-driving capabilities are not yet totally autonomous and require driver attention and intervention when necessary, Tesla's venture into autonomous driving is another significant stage in its journey. Elon Musk sees a time when complete autonomy is attained, which would allow Tesla to enter the robotic taxi business, a lucrative industry with vast room for growth and earnings that would eventually support the company's stock price. Examining the greater picture, while Elon Musk's ambitious timelines have been questioned in the past, betting against him has proven challenging. Nevertheless, during the Q2 earnings call this year, Musk expressed confidence that autonomy would revolutionize the company's financials. Tesla's short-term fluctuations in gross margin and profitability seem minor compared to its long-term prospects. The picture of Tesla's journey through 2023 is complex. On the one hand, the company has achieved remarkable financial success, with revenue exceeding expectations and a notable increase in stock value. On the other hand, the company faces difficulties, including declining gross margins and the need to strategically adjust prices in response to inflation and rising interest rates. These dynamics raise important questions for investors and market enthusiasts about how Tesla's pricing strategy. If you find our content to be interesting and informative, please consider liking this video and subscribing to Tesla Market. Two key questions. Can the company maintain its market leadership in the face of these economic headwinds? And most importantly, how will these factors affect Tesla's stock performance in the future? Please share your thoughts in the following comment section. Thank you for watching. For updates and more in-depth analysis on Tesla's financial journey.